Hello everyone. So today in the series of lectures on accounts receivable, let's solve some multiple choice questions on concepts that we have already discussed. So I hope all of you can see my screen. So let's read the question, understand how it should be solved. A company uses the allowance method to account for uncollectible accounts receivable. So a company is using the allowance method to account for uncollectible debts. After recording the estimate of uncollectible accounts expense for the current year, the company decided to write off in the current year $10,000 account of a customer who had filed for bankruptcy. So understand what has happened till now in the question. First of all, a company uses allowance method to account for uncollectible bad debts. Fine. After recording the estimate of uncollectible accounts expense, what does uncollectible accounts expense mean? It means bad debt expense. So after recording the bad debt expense for the current year, the company has written off $10,000 of a customer. So there is a write-off of $10,000 of a customer who has filed for bankruptcy. What effect does this write-off have on net income or total current assets? So first of all, I always say if you want to understand accountancy properly, journal entries are the way to go. So what is the entry for write-off? Allowance debit, 10,000, and accounts receivable credit $10,000. So the journal entry for write-off will be allowance debit, accounts receivable credit by $10,000. What effect does this have? So two options are given, net income, total current assets. First of all, both are entries belonging to balance sheet accounts. Since both are entries belonging to balance sheet accounts, there is no question of having any impact on P&L. And we also discussed this in the concept that there will be no impact on the P&L because of this. Next, what happens to total current assets? They are not asking accounts receivable. They are not asking allowance. They are asking total current assets. If you guys remember, the presentation of allowance is something like this. Gross accounts receivable less allowance for uncollectibles, and then you have accounts receivable, that is AR, at net realizable value. So what will be the effect of this entry? This entry will reduce your gross accounts receivable by 10,000. It will also reduce your allowance by 10,000. So net effect, same. AR at NRV will be same. There will be no difference. You can put a situation. So let's say your gross accounts receivable before the write-off was $100,000 and your allowance was $15,000. So your AR at NRV will be $85,000, correct? After write-off, what will happen? This 100,000 will become 90. This 15,000 will become 5. And AR at NRV will still remain at 85. So this virtually confirms the discussion that we had, that a write-off under allowance method has no effect on income statement or total current assets. Your correct answer will be option D. Your correct answer will be option D. Question number 2. When, see, try to read the question properly. I am taking so much of time because I also have to explain to you. Once you understand the question clearly in the first go, solving it will not be a big problem for you. When the allowance method of recognizing uncollectible accounts is used. So again, when the allowance method of recognizing uncollectible accounts is used, the entry to record the write-off of a specific account, what will happen? A, will it decrease both accounts receivable and allowance for uncollectible? Will it decrease accounts receivable and increase the allowance for uncollectible? Will it increase the allowance for uncollectible and decrease net income, or decrease both AR and net income? Let's look at the journal entry, no? Once you are proficient, you don't need to do this. So write-off journal entry will be allowance debit, accounts receivable credit. Now allowance is a contra asset account, means an asset account with a credit balance. So when I am debiting it, it reduces. Accounts receivable, asset account, debit balance. When I'm crediting it, it reduces. So yes, I have concluded that accounts receivable at NRV, that will stay same. But yes, it will reduce, any write-off will reduce both the gross accounts receivable and also allowance account. So option B, C, and D are incorrect as per the above explanation. It will be option A. That is, it will decrease both AR and allowance. B is wrong. They are telling it will decrease accounts receivable and increase allowance. Not possible. It's a credit account and we are debiting it. C is wrong. Increase allowance. Again, incorrect. Net income. It has no effect on net income. Decreases both accounts receivable and net income. No, it is decreasing AR but has no effect on net income. So correct answer is A. Question number 3. An entity's allowance for uncollectible accounts was $100,000 at the end of year 2 and $90,000 at the end of year 1. So they are telling us an entity's allowance for uncollectible accounts, the ledger, had a balance of $100,000 at the end of year 2 and $90,000 at the end of year 1. For the year ended December 31 year 2. So for the year ended December 31 year 2, entity has reported bad debt expense of 16,000 in its income statement. What amount did the entity debit to write off bad debts? So see, in this question, you have to understand they are giving us information about which ledger? Allowance. So we have to prepare ledger for allowance account. Now, the question is telling An entity's allowance for uncollectible accounts was 100,000 at the end of year 2 and 90,000 at the end of year 1. So at the end of year 1, whatever was your closing balance, that only becomes the opening balance, no, for year 2. So opening balance was 90 and closing balance was 100,000. So opening balance 90, closing balance was 100,000. Now they are telling for the year ended December 31 year 2, entity reported bad debt expense of 16,000 in its income statement. What is the journal entry for bad debt expense? Bad debt expense debit, allowance for uncollectibles credit. What is the journal entry for this? 16,000. So in the allowance account, where will it be posted? By? Now you have no other entry. What is the journal entry for write-off? It is allowance debit, accounts receivable, credit. So whatever is the difference figure has to be on the 2AR side. Now by definition, ledger has to tally. So the total of right-hand side, 90 plus 16, 106,000. This should also be 106,000. So what is the missing figure here? 2AR, because they are asking about write-off, 6,000. This is your answer, A. This is your answer, A. So you have to prepare a ledger and solve accordingly when you are solving questions such as these. So always remember that in this question, you are not supposed to get confused because they can only give a limited amount of information. Remember, you have to solve each MCQs in 108 seconds, right? So they are not going to give it a very lengthy question also. You have to find out your useful information. In this question, I found out my opening allowance balance was 90. Closing was 100K. Bad debt expense, journal entry was bad debt expense debit, allowance credit. So it should be posted on the buy side. And the only entry missing was write-off, which is what they are asking. So allowance debit, AR credit, that should be the missing entry. So 2AR, balancing figure, 6,000. Question solved. Next question, and this will be the last for this today, this session. An analysis of an entity's $150,000 accounts receivable at year end resulted in a 5,000 ending balance for its allowance for uncollectible accounts and a bad debt expense of 2,000. So what has happened? I have analyzed an entity's allowance account. The closing balance is 5,000, bad debt expense is 2,000. During the past year, recovery on bad debt previously written off. Remember the journal entry? You can understand it from that also. Cash debit, allowance credit. But there are two steps: AR debit, allowance credit, cash debit, AR credit. So during the past year, recovery on bad debts previously written off were correctly recorded at 500. So last year, bad debt recovery has happened, $500. If the beginning balance was $4,700, what was the amount of AR written off as uncollectible? So again, they have given us all the information only for allowance for uncollectible ledger. If I prepare AR ledger, I will not get the answer. So what is the opening balance in the question? Question in the first line tells me an analysis of an entity's $150,000 accounts receivable at year end resulted in a 5,000 ending balance. So two balance CD is given. That is 5,000. Continuing, and a bad debt expense of 2000. So what is the journal entry for bad debt expense? Just discussed it in the previous question. Bad debt expense debit, allowance credit. So it will be 2000. So this will go in the buy side of the ledger. By bad debt expense, that is $2,000. During the past year, recovery on bad debts previously written off, you are correctly recorded at 500. See, it will not make a difference if you write it net entry, but the correct entry is AR debit, allowance credit. First, this would have happened $500, and then cash would have been received. So cash debit, AR credit. Your answer will not change even if you record by cash, but that is not correct. So it will be allowance account is getting credited once by AR. Of course, you can write by cash here also. Your answer will not change. But again, to keep your concepts clear, it will be 500. If the beginning balance was 4,700, now they are telling us the beginning balance by balance sheet BD. That was 4,700. What is the amount of write-off? Again, write-off entry has to be on the left-hand side because the journal entry for write-off is allowance debit, AR credit. So if I total my ledger on the right-hand side, it is $7,200. And on the left-hand side also, the total should be $7,200 only. Now in this 5,000 is already there as closing balance. So balance must have been written off. 2,000 balancing figure. This is your answer. Balancing figure. Sorry, 2,200. My apologies. 2,200. So your answer is C, the balancing figure. So always remember when you are solving questions in AR or any other topic, try to understand the flow of journal entries. Once you understand the flow of journal entries, your life will become really easy. We'll continue this series of lectures or AR in subsequent sessions where we will discuss balance sheet method, aging method, factoring. But that's it for today. So if you like the video, like, comment, and subscribe to the channel, and you can always WhatsApp me your queries. Thank you for your time, everyone.